So the Fed holds rates steady this week, and what does that mean for mortgage rates? So we are going to have to get used to mortgage rates being right about where they're at. I don't think we're going to get this big move lower in rates, and I think that's going to be disappointing for consumers. I would love to see rates move significantly lower from here. There's just a lot of market dynamics that may prevent that from happening. You have to think about the bond market. You have to think about deficits. It's something, if you watch a lot of my videos, I've been talking about a ton. But what you really have to look at is inflation's still been a little bit sticky. You have a new Fed chairman coming in. You have the current Fed chairman being, indicted. You have a government shutdown, a partial shutdown. You have all the geopolitical stuff going on overseas with Iran and Venezuela. All of that creates uncertainty, and the bond market hates uncertainty. So, the last few times Fed has lowered rates, mortgage rates really haven't moved that much lower. The biggest move we had in rates was really just on the announcement of the $200 billion purchase of mortgage-backed securities, which really most of that move has already been erased. Now, I don't see rates moving up significantly, but I also don't see rates moving that much lower. But this is the thing I would have you think about. If rates would have moved lower to around 5.5%, that would have had a rush of buyers re-enter the market, which some would say that's great news. The problem is we just don't have the inventory. So there are going to be opportunities that show up in this market. And some of them were, November and December of last year, we saw a lot of buyers negotiating, doing inspections, not waiving contingencies, and actually getting closing cost credits paid for. We've seen some opportunities when rates dip below 6%, and people took advantage of that with refinancing or purchases. But these opportunities are not going to be like they've been in the past, where we just have rates go down and stay there for a while. They're going to be, moments in the market. So the more work that you do up front and the better you prepare yourself for those moments, the more likely you are to be able to take advantage of that.